If you invest your money properly, you will get rich. But for investing, you must know its rules. In this video, you will get to know the 10 most important rules for investing. Now let's start. Number 1. Commence as soon as you possibly can. To fully capitalize on the potential of compounding, it is essential to begin investing at an early stage. If you have a head start, your investments will have plenty of time to thrive, and the power of compounding will increase with each passing year from that point on. Putting money aside and making investments as soon as possible is something that should be done, even if the starting sum is not very large. Because the longer term allows for compounding and growth of the money, beginning early enables modest deposits to be made each month, which leads to the accumulation of the desired corpus over time. Number 2. Establish a regular pattern for your investments. To put the power of compound interest to work for investors, the most important things are to get started at an early age and to maintain a commitment to the endeavor. When investors make consistent investments, whether on a monthly or yearly basis, they are able to maintain a steady flow of contributions that may accrue and grow over the course of time. Also, there are now a variety of services that are accessible to people, which enables them to automate their investing processes. This has the potential to be of great assistance in terms of keeping discipline and making certain that one does not lose out on opportunities for advancement in the future. For those who are beginning with a modest amount, investing on a regular basis might be a helpful technique. They will be able to start investing and steadily increase their corpus over the course of time. Please subscribe to our channel and also press the like button to help us complete our first 1,000 subscribers goal. Number 3. Select the relevant potential investments to make. The advantage of compounding interest is available in a variety of investment alternatives that are available today. Investment opportunities include fixed deposits, high-yield savings accounts, money market accounts, mutual funds, stocks that pay dividends, savings bonds, certificates of deposit CDs, exchange-traded funds, trusts for the investment of real estate, and tax-saving schemes that provide compounding benefits. These are just some of the investment options that are available. A comprehensive comprehension of the possible dangers and benefits associated with any investing choice is of the utmost importance. In addition to this, it is essential to conduct a comprehensive analysis of the potential outcomes of each investment and to make certain that these outcomes are in line with the objectives of the investor. Number 4. Reinvest by making use of profits and interest payments. You should reinvest any profits, dividends, or interest that you get in order to help your money grow. This is essential if you want to make the most of the advantages that compounding offers. The impulse to take the interest that has been generated from the value of their assets or to spend it immediately is something that investors should try to resist with all their might. It is recommended that the profits be allowed to develop, accrue, and compound more over the course of time. The total profits that investors get might be significantly improved by using this strategy. Compounding is a powerful tool that allows investors to fully exploit its potential and accelerate the growth of their money. Number 5. Resolve to invest for the long run and make a clear commitment to doing so. Investing with a well-defined long-term plan is recommended in order to make the most of the compounding interest benefits that are available. It is recommended to avoid the temptation of withdrawing your money prematurely, particularly when it has increased greatly. This is similar to the advice that a financial counselor would provide you that you should follow. Your money have the potential to gain a considerable amount of growth if you continue to invest it for a lengthy period of time. With compounding, the growth of your money happens gradually over a period of time, thus having patience is essential if you want to reap the full benefits of this powerful financial tool. Number 6. Determine the compound frequency that is appropriate. For example, compounding may take place on a yearly, semi-annually, quarterly, or monthly basis, among other intervals. Your money may be rewarded with daily compounding interest via a variety of investment alternatives that are accessible. Because of this, it is very important to choose the optimum frequency for compounding. It is possible to greatly increase the growth of investments by increasing the frequency of compounding. Despite the fact that either monthly or daily compounding has the potential to provide better returns than yearly compounding, it is essential to take into consideration the dangers that are linked with it. Before deciding on the optimum compounding frequency, investors should give serious consideration to the principal amount as well as their level of comfort with risk. Number 7. Increase the possible returns on your investments. It is smart to think about raising the amount of money you contribute to your assets as they continue to rise in value. If you want to accelerate the process of compounding and increase your potential for accumulating wealth, it might be a good idea to make consistent additions to your investment portfolio. You will be able to maximize your capital and produce bigger rewards via compounding if you continuously invest higher contributions with you. Increasing your income may also be accomplished by examining other asset classes and taking into consideration a variety of investment opportunities. This not only helps to maximize the potential for compounding gains, but it also helps to diversify possible risks. Number 8. Keep yourself informed and up to date at all times. It is possible to get a vast amount of information on a variety of internet platforms nowadays. It is possible for people to keep educated about investing without incurring any costs by making use of the many resources that are accessible, such as instruction, guides, and educational groups on social media platforms. For the purpose of routinely monitoring and managing your investment portfolio, it is essential to maintain a level of awareness about market trends, economic news, and investment ideas. Investors may ensure that their investments are in accordance with their financial goals and the level of risk they are willing to take by adhering to this pattern of behavior. For the purpose of making well-informed choices and maximizing profits, it is vital to have access to market information and to have a solid grasp of the various investing methodologies. Number 9. It is recommended that you seek the advice of a qualified specialist. Particularly for those who are just starting out in the world of investing, investment portfolios may represent a significant challenge. On account of this, it is highly recommended to seek the guidance and counsel of a licensed financial advisor in order to get expert assistance. Investors are able to create a uniquely tailored investing plan that is in perfect harmony with their goals by using this tool. For the purpose of laying a strong foundation for future returns, it is essential to get off to a running start. Investment plans that are comprehensive and take into consideration the investor's risk tolerance and goals may be developed with the assistance of experts. Number 10. The power of compounding is seen. Investors would be well served to educate themselves and remain committed to growing their financial knowledge on a continual basis. By reading books, going to events, and making use of online learning tools, investors may acquire information that is essential to their industry. Because of this, people may be assisted in the development of efficient strategies and in making financial decisions that are properly informed. One of the most important things you can do to increase the value of your assets over time is to have a solid grasp of the basic concepts of finance. When it comes to the realm of finance, it is essential to recognize and capitalize on the ever-expanding chances for compounding. An investor's ability to cut investing fees and expenditures might be aided by having a strong grasp of how things function. That's all for today. Now you know how to start your investment journey. Press the subscribe button and also the like button to help us complete our goal of 1,000 subscribers.